Southwest Florida is a place of sunshine and opportunity. But even here, your financial future won't plan itself. Right now, proactive planning is the difference between simply reacting to the market and confidently building your wealth. I'm Alfie Townsend, your neighbor and a certified financial planner professional. If you're ready to position yourself for the opportunities ahead, whether in retirement planning or market navigation, then Saving the Investor is for you. Coming up on today's show,
types of trusts, leveraging donor-advised funds, putting your lazy money to work, and much more.
Welcome to Saving the Investor with certified financial planner, investment advisor, and insurance professional Alfie Townsend, president of Advantage Retirement Group. Alfie is a published author, radio show host, speaker, and industry leader.
Why do you use an annuity? A lot of people use it for the wrong thing.
He works with retirees and pre-retirees to build and protect their nest egg and offers his experience to help those concerned about financial independence in retirement. If you've got questions about retirement, Saving the Investor starts now.
Good morning and welcome to Saving the Investor alongside certified financial planner professional Alfie Townsend. I'm Craig Wolf, and we are here at the Advantage Retirement Group. Alfie, good morning.
Good morning.
Let's start this morning by talking about trusts. Quite simply, there are lots of them, and we need you to explain.
Well, first of all, people come into our office all the time, and they have a trust, and trusts are great things now, but they're different ones. So I just want to go over a few of them that are popular. And I'm not an attorney. I'm a certified financial planner professional. So my job is to help look at a trust. And then we do partner with attorneys that will really make a trust for our clients. But a lot of people, the misconception is if they have a irrevocable trust, but people think they have an irrevocable. A lot of times it's revocable. That means that it's going to bypass probate, which is a good thing. You know, you put your assets in there, your home, your car, your belongings. You don't put your IRA in there, but that will bypass probate. Now, why do people do a trust? They want to bypass probate without anybody knowing what you're passing on. So anytime you can avoid probate, it saves money and it keeps it private. So those are the more popular one, the revocable trust. But the irrevocable trust is the one that is harder to make changes to, but what it does for you is it's credit proof. So if you want to protect your assets, you would put it in a irrevocable trust. So a lot of people think that their revocable trust has credit protection, but it doesn't. So we could help look at that for you, and then the attorney would build the one that's right for you. But the one that I feel that people don't have, and this is something new that our attorney is, that we partner with at the Advantage Retirement Group, is called a community property trust. And what's different about that one is you would have, let's say a husband and wife has a high appreciative asset. Let's say it's an Apple stock that you put $1 million in, is worth $5 million now. Well, if one of the spouses died without having any planning involved, half of that gain, that $4 million, half of it is going to will get a stepped up basis, but the other half, the spouse that passed, you're going to have to pay capital gains on that 20% at that kind of rate. So you're going to have to pay $400,000 on something that you didn't think you're going to have to pay anything on. So a community property trust, you could have your house in it, because let's say you have a big house and one of the spouse dies. A lot of times that spouse will sell that house and move back up north where their kids are, or they want to downsize. Well, only half of that, the gains on that is going to be stepped up basis, and you're going to have to pay capital gains on a whole lot of money. So this community property trust is something that you really should look into. Most attorneys are not know really enough about it, but the attorneys that we deal with, that's what they do with all their clients, and I have one for myself also. So this is something that you might want to look into. Give us a call, and we'll see if this is right for you. But I think that's something that it can give you an immediate tax advantage that you should take advantage of.
And when it comes to community property, the laws are different in every state. And I would imagine you do have clients and potential clients that are coming here from other states.
Yes, and most states, the state of Florida is not a community property state, so that's what this trust is a little bit, makes it taxable a lot more friendly for you.
All right, good information on trusts. As Alfie mentioned, if you'd like even more information, give us a call here at the Advantage Retirement Group. The phone number's on your screen. Much more to come this morning, so stick around.
You are watching Saving the Investor, where your money matters.
Are you ready to take control of your retirement and create a sound financial future? Well, the first step is simple. Be one of the first 7 callers right now and schedule your complimentary, no-risk, no-obligation retirement review with Alfie and his concierge team. When you visit Alfie's office, you'll sit down and discuss your unique goals and concerns. Alfie and his team, they don't just talk about financial planning, they craft personalized solutions. On your first visit, you can expect expert analysis of your current situation, risk mitigation techniques, tax saving strategies, and that's just for starters. In the world of financial planning, experience matters. And with over 40 years of experience, Alfie understands the needs of those who are retired or soon to be retired. From investment allocation to income planning, tax strategies, and estate planning. Your retirement success plan awaits simply by taking advantage of Alfie's complimentary, no-risk, no-obligation retirement review. Be one of the first 7 callers right now at 239-747-1080. That's 239-747-1080. Call now. Your future financial self will thank you.
One thing about being in the financial business for over 40 years, we get a lot of questions all the time, and especially us because we have a TV and radio show. So we're going to take some of these questions that are asked frequently. That means that you are wanting to know the answers and you're going to get them today.
Alfie, I've heard you talking about guaranteed income. It sounds great. Can you tell me what exactly that means and why it is so important?
So you have different vehicles that can give you income. We talk about our structured notes. They have a buffer of 30%. As long as the S&P or NASDAQ doesn't go below 30% from when you get in, you're going to be just fine. You're going to get that 8 or whatever the interest is. It changes daily, but it will be locked in for you for that 21 months. Okay, so that's an option. We have the tender offers that have protectors on there. But if you want no risk at all, if you said, I want 100% protection, then there's things out there that's called really a fixed annuity that will give you a lifetime income that you can never, ever outlive, regardless if your money is all gone because you live so long or you use it for home health care. A lot of times, some of the annuities will give you long-term care. And if you went through all your money, as long as you have as long as you're living, that income is continually going to come in. So there are vehicles out there that can give you lifetime income. We can talk about the few options, quite a few options out there that we have for you.
How do you estimate someone's tax bracket in retirement, and how does that affect them?
So tax brackets usually go down when you retire from when you were working. But what happens is at age 73, you have to start taking your required minimum distribution out. Some people come in that they'll have to take out $100,000 to $200,000 out of their IRAs. So what we might want to do is start reducing some of that IRA before they turn 73, before they have to start taking it out. So everybody's situation is different, but what we'll do is review everything and make sure we give you the best option to start taking that money out of your IRA.
Alfie, I have a retirement plan, but I haven't looked at it for a few years. What's the first step if I want to get a second opinion on what I have now?
So the first thing you want to do is look at your accounts more than what you're looking at right now. You want to look at it at least monthly on your statements. Don't get crazy looking at it daily. That will definitely drive you crazy having it go up and down. But what we want to do, we do what we call a retirement simulator, and we will put your 401k or we will put your portfolio through our process, and it's going to find out what you have in there. If it's long-term bonds, short-term bonds, if it's small cap, large cap, value companies, what are you holding in there? And the most important thing is, are you diversified? And what is my fees? People say, Alfie, I don't have any fees in my account. My advisor's not charging me. But I can tell you one thing. The advisor is not keeping his lights on and paying his staff without charging you. So it comes from something, and it usually comes from the fees inside your portfolio. So let us look at your portfolio and show you right out what your fees are that you're not seeing. And the reason you don't see them because it comes from your returns. So if it's a 1.5% fee and you made 8%, you really only, you really made 9.5%, but you only made 8% because your fees are hidden inside your account. And that's what the retirement simulator would do, is find out what's going on inside your portfolio.
Need quick financial clarity? Alfie can help you identify what's working and what's holding you back in just 15 minutes. No pressure, just insights. Text 15 to 239-747-1080.
You are watching Saving the Investor, where your money matters.
You have done the heavy lifting, saving $500,000 or more, but as you know, managing a substantial nest egg comes with its own unique challenges. Unexpected taxes, market volatility, and ensuring that your legacy lasts. Well, Alfie and his team understand the complexities of the $500,000 plus portfolio, and that's why we are offering a complimentary, ultra-focused 15-minute retirement checkup call for serious savers. This is not for beginners. This is a rapid-fire review, and it's focused on advanced strategies. For example, minimizing the tax hit on your hard-earned savings, stress testing your income plan against today's inflation, making sure that your portfolio structure is truly built for preservation and growth. Your wealth deserves 15 minutes of an expert's time. So to secure your exclusive checkup call or text the number 15 to 239-747-1080 right now.
Welcome to another segment of Team Talk. I'm Mary Thompson in studio with Alfie Townsend, our founder and president. Alfie, we've been talking about how we help our clients that are high net worth. Maybe they've sold a large asset like a business, or they have a very high tax year. Yeah. There's some unique strategies that you've been talking to them about, which is donor advised funds.
Yeah, the donor advised fund, a lot of people you might have heard about it, but don't know really how it works. And we do those all the time. And it is good for someone that has a large income. It could be ongoing income, or it could be maybe, like you said, they sold a business or they sold, some stocks or a big asset, and now they have a big tax bill.
Right.
Okay, and what do you do with a big tax bill? Now, if you're charitably inclined, where you're giving to charities each and every year, that will help. But what if you could give a big chunk, let's say $500,000, for example, if you wanted to give $500,000 to a donor advised fund and then have that come off your taxes, so you would get the full 100% deduction. Now, the good thing about it is that money in that fund grows tax-free each and every year, and you're able to take it out to give to charities throughout the year. So you don't have to do it in the year that you give the money into that fund. So that makes it where you have a large deduction right off the bat, and your money keeps growing. So that 500 can grow to $1 million, $2 million, and you have that to give to charity. Now, when you give it to charity along the way, for years in the future, you do not get a deduction that year because you got that large deduction, but that will be the fund that you start giving your charity to. It could be church, it could be any type of charity that you currently give to, but you would be able to give it out of this fund. So it's a great strategy if you have a big income, and that income is going to be an income that you want to take advantage of a one-time deduction. That
I really like that, because a lot of our clients, when they come in, we talk about their values and what's important to them. And we do have a lot of very charitably inclined clients, big hearts. And
we do. We do. And it's, when you give, it's, we always talk about it, it's better to give than receive. And a lot of clients that come in, they always talk about it, like, with RMDs, they talk about that. That's a whole nother section we'll talk about. But donor advised fund, it could be the ticket if you have a big income for that 1 year, or if you have a big asset that you sold and you need to offset it, this would be the way to do it.
Great. I love that. Thank you for sharing, Alfie.
Yes, thank you.
Well, if you are finding yourself in a wonderful situation where you have suddenly a large tax year, maybe you sold a business or have a large asset that you need to reposition, give us a call and Alfie will talk to you about the donor advised funds.
You are watching Saving the Investor, where your money matters.
Do you want to live your best retirement? Well, of course you do. The more relevant question is, are you really prepared to do that? Well, certified financial planner professional Alfie Towngend's latest book, Making Waves in Retirement, breaks down the insights he's gained in his 4 decades plus helping people just like you plan for retirement. It features real stories about real people, illustrating what they've done wrong and what they've done right. Inside, you'll find strategies to help retirees and those soon to be retired make the right decisions and avoid costly mistakes. Whether it's battling inflation, navigating market volatility, or managing the threat of recession, these strategies may help you too. In fact, this book is essential for anybody who wants to retire with confidence. And you can have a free copy right now. Just be one of the first 5 people to text BOOK to 239-747-1080. Don't wait to get this incredible resource. Take control of your retirement today. Text BOOK to 239-747-1080 right now and get your free copy of Making Waves in Retirement.
In my book, I talk about lazy money, but I'm going to talk about boating right now. If you have a boat, you got to take care of it. You have to run it. If you're not running your boat, it does worse for the engines and just letting it sit there. You do not want to let a boat, especially diesels, you don't want to just let it sit there. You need to start it up. You need to run the boat, and you need to maintenance the boat. You need to, make sure that you're diving the boat if it's staying in the water, because if you don't, you're going to get barnacles in there on the hull of the boat, and they're very, very hard to take off. Then what you have to do is take it out of the water, pay for that. You have to pay for scraping it and repainting it. So maintenance on a boat is very, very important. And really, when it comes to your retirement, your portfolio, and not only your portfolio, money that's just sitting in bank, we call that lazy money. Money that just sits around, and you're saying, I'm making a little bit of interest on it, so I'm okay. So we call that lazy money, and we say, you know what, you can take some of that money, and why not get 8%, even up to 15% on some of that lazy money to make it go to work for you, put it to work for you. And a lot of people, they get complacent. And that's the worst thing you can do when it comes to your money, is get complacent and not make sure that it's working for you. That's what the money that you worked real hard to earn, you need to have that money work for you. So if you have money sitting in the bank that's making a few little, percentage points, give us a call. We can come in. You come in, I'll show you what we can do with that money. And if you can make extra money to take that trip that you always wanted to take, you could do that, or just build up more money from it. But lazy money is very important to put to work, because if you're not putting that to work, then with inflation, has been relatively high the last few years. So inflation, you got to stay ahead of inflation, and the banks just aren't doing it. So if you have some lazy money around there, give us a call. I'll show you what we can do with it and get to work for you. Thank you.
Don't wait for a full meeting to make progress. Alfie and his team are offering a 15-minute call to find out what's possible. Take action now. Text 15 to 239-747-1080.
You are watching Saving the Investor, where your money matters.
Maybe you remember the old TV commercial, "Pay me now or pay me later." Consider this. We're actually in the lowest tax bracket in the last 30 years, but these rates may not last for long, and where they may be headed could put a dent in your retirement. But there are things to do right now to reduce your future taxes and make informed decisions about your retirement. Certified financial planner professional Alfie Townsend has a great free resource. Just go to savingtheinvestor.com and you can generate a quick report that can help you evaluate your potential tax bill in retirement. And it takes less than 1 minute. If what you learn surprises you, it's time to talk to Alfie. There may be ways that he can help you so that you can keep more of your hard-earned dollars in your pocket. Paying your fair share is one thing, but who wants to pay a penny more? Protect your financial future. Find out if your retirement tax bill could be too big by visiting savingtheinvestor.com or using the QR code on your screen.
Now it's time for our segment, Knowledge is Power. And Alfie, we're going to talk about alternatives to bonds. In the old days, people would put money into bonds as sort of a safe haven, but there are other ways to tackle that.
Yeah, it used to be like that. I've been in the business for 40 plus years, and it was always 60-40 portfolio. The bonds, will really offset volatility. But there are, if you don't grow in this business, I say you're dying in this business. So you have to stay ahead. And David Antonucci, let's talk a little bit about what we do with our clients, because, bonds are not really what they used to be these days.
Yeah, we see it a lot.
Yeah.
A lot of advisors that clients are currently with, they come in and it's really just stocks and bonds and nothing unique, nothing creative about it. And the bottom line is we've seen a decline in bonds really the past 5 years. If you look at the average bond portfolio, it's down pretty much double digits, the average bond portfolio. And even 2022, that was a year where the market was down. If you remember, the Feds were increasing rates. There was fears of recession, et cetera. And that was the first year since the 1800s where stocks and bonds were both down more than 10%.
Yeah, that's crazy.
Yeah, the S&P was down 18, and what happens usually when stocks go down is investors retreat to bonds, and that didn't happen. The average bond portfolio was down 13 in 22.
That was not a good year.
No, not a good year. But even then, if you were in bonds, you most likely haven't even recovered since that downturn in 22. So, if you talk about solutions, alternatives to bonds, we could talk through a few different ones. There's buffers, buffer strategies, which we use quite a bit here at the firm, where you have a predetermined downside protection with a predetermined upside cap, and it'll track an index such as the S&P 500, so that, hey, going in that for that calendar year, you have an upside participation of X, and you have a downside buffer of a predetermined. It could be a 15%, a 30%, whatever it may be. But that's a bond alternative. Some other ones, Alfie, that we talk about are even fixed annuities. For clients that really have a low risk tolerance or don't want anything to do with the market, we're seeing ultra high rates right now for fixed annuities. So you talk about, and annuities, obviously this will be for another segment, but we talk about annuities, how there's so many different kinds. Well, the ones that we primarily use, Alfie, are the fixed ones. And the fixed, they have a predetermined, a term, I should say. It may be a 3-year, a 5-year, and it has a fixed rate. Just like a CD, but it's insured or it's issued by an insurance company. So that would be the differentiator. But that's something that, hey, I wouldn't mind a 5% return or whatever it may be. And obviously we can.
And not tie it to the market. The main thing is you don't want to tie it to the market. And that's what gives you the diversification. That's what gives you it really reduces your overall risk in your portfolios when you do it that way. So, we would do that. Structured notes have been a very good for our clients. People, when you're retired, usually people want safety for income. And when you're getting, 7, 8, 9% with safe money, that's not bad.
Yeah.
Because the old rule of thumb was always 4%. Take 4% out of the portfolio, and then you're going to be just fine. Well, 4%. If you need $120,000, you need $3 million. Take 4%, and that's a lot of money. That means what are you going to do with the other money sitting in there? You're taking 4%. So these are things that you can get double really with what your the rule of thumb is.
Yeah.
Get 8%, and then you can do something else with the other money as invest it and do it. So the whole bottom line is diversification and then alternatives to bonds.
Yep.
To make things happen.
Yeah, and I would even just piggyback off that in a sense where, we're not the firm to be anti-bond or anything, but when I see, when Alfie sees, when our advisor team sees clients coming in with just bonds as their safe money, that's really not the best way to do it, in our opinion. There's other strategies out there that you want to take advantage of. So if you're a viewer that has only bonds as your safe money, let us look at some alternatives for you.
Bond portfolios down double digits. Are we in some sort of record territory there, or has that happened?
Well, that happened, since 2022. It's like David said, it hasn't really recovered.
Yeah, and for the average bond portfolio, it was down 13, right? And bonds don't recover. You got to make more than 13 to get back to even, and bonds don't have that type of rebound potential.
No, they don't.
So that's the sort of issue at hand. Is we want to get some higher paying options that are conservative in nature, right, but still have a higher upside potential to them than a bond.
All right, David, Alfie, great information. Thank you. If you would like some more information on bond alternatives, give us a call here at the Advantage Retirement Group.
Clarity, confidence, and control. It all starts with one simple step. Take 15 minutes to talk with Alfie and his team. Text 15 to 239-747-1080.
Well, that's a wrap for today's episode of Saving the Investor. But creating a secure financial future for yourself and your loved ones is an ongoing journey. I know it's important to you, and that's why I'm asking you to call the number on your screen right now. If you're one of the first 7 people to reach us, you'll receive a complimentary consultation with Alfie, where he will use the insights he has gained in his 40-plus year career to review your financial plan. Today's world seems more uncertain and volatile than any time that I can remember, and your financial future is too important to leave to chance. Whether you're navigating market uncertainties, planning for retirement, or securing your family's legacy, now is the time to take action. Be one of the first 7 to call 239-747-1080 and schedule your complimentary consultation with Alfie. Take that first step now. You've got nothing to lose and quite possibly much to gain. Thanks for joining us today on Saving the Investor. We look forward to seeing you next time.
Alfie wants to help you get a clearer financial picture. Have a simple 15-minute checkup call. See if his approach is right for you. Text 15 to 239-747-1080.